We would like to see progress on this front. It just, to us, we think we will see it. It just makes no sense to us that in this third year of a presidential cycle that President Trump would want to push this through to an ugly trade war position. We know that he's going to negotiate to a greater extent than we've seen before with other presidents, policymakers. So that's going to be painful as he does that, but we would think that he would not want to bring on a recession and see economic slowdown. So we think both sides have great incentive, maybe push it to the limit, but have great incentive, maybe not to make a great deal, but for things to be less than feared when all is said and done. And we do obviously hope to see that from a psychological standpoint for the
maybe
market.
Taking a little bit of the pressure off and lowering the rhetorical volume a bit. Mike Labella, do you see it that way? And if so, do you think this is a time to reallocate away from some of the sectors that have been successful over the past couple of years and into more defensive sectors, just in case things don't turn out the way Jeff would like to see them turn out?
Yeah, I can't read President Trump's mind, but what we've seen so far is that
you've got company there.
He's not really interested in racketing the rhetoric down. If anything, we saw with GM this morning, he's interested in bringing it really high up. And the other reason is that President Trump believes in this. His America First strategy is very much about protectionism. He rejects globalization and the idea that free trade is a good thing. So investors should expect more volatility, and we've seen that in the markets this quarter. Every major asset class is negative this quarter. That's U.S. and international bonds. That's also U.S. and international stocks. That is causing a lot of indigestion for investors right now.
So what should I do with my money right now in light of that volatility, in light of what you see? And Larry Kudlow said, I mean, this is all of a piece of promises made, promises kept, that he's going to keep the pressure on China until they do what he thinks they ought to do and what many in the international community thinks China ought to do with respect to intellectual property and trade barriers. What should I do, Mike?
Yeah, so while the administration tries to figure this out and while the market tries to deal with the implications of that, it's time to move to less volatile stocks. The one bright spot this quarter are defensive equities. Stocks in sectors like utilities, consumer staples, even real estate are all positive between 1% and 3%, while the market's actually negative over 10% this quarter. So now's the time to start reallocating those to those stocks in your portfolio, as you own a lot less of them than you did a decade ago. Technology's up over 500% this past decade. Utilities aren't even up about 170%. So what that means is you own a lot less of them in your portfolio. So it's time to look for stocks that have high dividend yield, strong earnings yield, as well as less cyclical demand, so you can ride out these potential bumps.
Let me give Jeff the final word here. Do you see it that way, or are you more inclined to stick with the growth names that have been as powerful as Mike just described?
Well, we do believe in a blend of growth and value, but this is what makes, it a beautiful market. It is a market of stocks, not a stock market. So we find great value within pockets of technology. Micron Technology, for example, is priced at 4 times earnings and is priced for just collapse in demand. So we see pockets of technology, not FANG, that are just on sale with very good fundamentals, great balance sheets. I could say the same thing in consumer discretionary. Carnival Cruise is an example of a name within leisure that we think at somewhere around 13 times earnings with 13% earnings growth, great dividend yield, dividend growth, marvelous. And then within defensives, rather than running to the utilities and staples, healthcare, Merck, great example of a name with dividend yield and growth and catalysts there.
All right, gentlemen, we have to leave it there.
That's the beauty of the market.